Right, welcome, guys. Hope everybody's well. It's Tuesday morning, 8:02, Joe, 40 degrees in Qatar. Yes, I know. I think it's going to be about that when I head over to Dubai in June, but needs must. Right, so let's obviously have a quick, scathe through. Let's hop onto the news. First of all, GDP in Japan. So. Japan have been quite vocal. One thing that I've been reading a lot again is Reuters, Reuters, Reuters. Um, so lots of obviously talks on there about J Japan potentially starting to get aggressive again. In regards to the FX markets because they want to control their currency. Whether there is a bit of a worry that USD JPY might be creeping back up to that area which they don't like very much, which is that 160 area. Remember, they're big importers, massive importers. So if price is too out of control in regards to the US dollar against yen, then obviously it's costing them a lot of money. So they are prone to control their currency. And obviously, if we hop on a USD JPY chart, we can see, well, any yen chart, we can see these moves to the downside here. That is how much that kind of gives us that impression, on the kind of quick selling pressure that is approaching yen. Obviously, we're coming back up to this area. Sorry, everyone's joining as I'm trying to draw. Coming back up to this area. This is our kind of zone where we could see something like this happen again. So let's wait and see what happens. But obviously that's why I stayed away from yen this morning. So we've obviously then had RBA meeting minutes. I would say they're just not very. They're not acting very aggressively, but then obviously everyone is pretty defensive right now in regards to obviously they're looking after their currency. We've obviously then had some UK data come in, nothing crazy. Obviously, unemployment has ticked up. All right, this is probably the key one, probably expected to, and that's what's important about the US. We had obviously last week was, their unemployment rate has, stayed where it is, whereas everyone else's is slowly starting to tick up slightly. So that's obviously the main bit of news to take out of this morning, and that's what I think we just missed out on GBP USD, which is a little bit unlucky. Literally, I think only just missed out. Yeah, this here must have missed out by about pip, half a pip, I reckon. Look at this. There we go. One pip. Unlucky, unlucky. But you know what? We've obviously got the direction correct, which is what we expect. So, not much else coming out. We've got ADP employment change. We got Wallace speaking. And then for anyone trading CAD, we got inflation data for CAD. Everyone's inflation has been coming out higher. So I'm not expecting CAD to be any different. So that's obviously, looking into the news of today, we've obviously then got to think about, right, Aussie defensive, pound's going to be defensive. You can guarantee yours going to be defensive, right? I'm giving you a roundabout view here of obviously that's happening. So then we've obviously got yields here still screaming higher, looking like we're going to potentially come up and touch this again. I think this is a key kind of area for yields. I don't normally mark them out technically, but obviously this is a key area. This 4.62 struggled to break twice. Are we going to break through and come into this next kind of area up here? That's obviously question number one. The dollar, we obviously have been expected. We called this move yesterday, coming back down to retest 99. And obviously now we've had, we had one rejection, two rejections, three rejections, four rejections. But obviously, is there enough? There's a bit of a tailwind here. Now, obviously, one thing that I am very, very wary of, and obviously I will speak about it today, is gold. right? I actually think gold is due a bullet, move. And if I was to hazard a guess, it's all going to be based on yields, but I would hazard a guess we're going to come into initially this area here. All right. But it's just a case of, it's a bit of a waiting game here. Is there enough for gold to be dropping down below this? I don't think so. So we're kind of trapped a bit here, so I don't think it takes a genius to call buys from here. But obviously it's against what I am looking at here, So calling buys is a technical view. It's not the fundamental kind of macro view wouldn't be to buy from here. It would probably be to look to sell from somewhere here. All right. So that's obviously the difference between what I do and then what I've seen say 70 odd percent of the market do, is they'll be looking at this thinking, right, buys from here. Yep, great, can work, but I like to stick to my routine of, what I'm, happy with obviously how I'm trading. And obviously, I want there to be a reason for me to enter a trade. I don't want the reason to be the price is holding up in this area. That's not a good enough reason for me to enter a trade, even though I do think price is going to pop up here. So yeah, my strangely, this always reminds me actually of my granddad. So he used to be very very heavily into like horse racing. He used to do it as a hobby. Well, wasn't a gambling addict or anything. He'd do it purely for fun. All right. But we'd be watching the, horses. It used to be on Channel 4, and he would be, he'd tell us which horse was gonna win, but then he'd have bet on this other horse, and you could guarantee the horse he thought was gonna win would always win, but he'd be betting on this one, and we'd be like, well, yeah, but very, 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 very similar scenario here. I'm looking for this price to pop up here to then potentially come back to down. This would give me reason to enter this trade. However, I do think yes, price, should pop up here. So let's wait and see. Right, the trades we are in. So pound, we actually just missed out on this, but you know what? I never get upset when I miss out on a trade and it goes the direction I want it to. I utilize that. I think we always need to instill confidence in your own trading strategy. It's very very easy to get. To kind of beat yourself up and obviously not your confidence, you've got to take the positives from everything. So you need your mindset to stay on this high. All right. And so, I will be taking this as a positive, it's brilliant. We've obviously got the direction right. I can't grumble that my zone is, one pip out. Euro, similar, doing really, really well here. Happy. We had this nice rejection here. All right, this was our trade setup here. And if you went aggressive, which we'll go through in a minute, because I had a question on this morning. I just want to make sure everyone understands. Three entries. This one here would have triggered. And obviously it's running away with us nicely. And then AUD, I'm actually half tempted to close this out. I don't like the price action. I don't like this build up here. It's very, very, very slow. So I'd rather probably just leave Euro running, and then hopefully we can capitalize on something a bit more this afternoon. So that's what I'm kind of looking at. So I will update you guys in a bit on this one. Now, there's a few few topics that obviously I wanted to speak about this morning. Um, One is the pressure on gold. All right. And so gold geopolitically should be flying higher. All right. Well, we all know that oil is. All right. Oil is climbing, because we're hearing all sorts of things. I'm getting tweets left, right, and center. Like I've just had a tweet on here Trump prepared to attack Iran on a moment's notice. Like, I must get about 20 of those, or I'll get Iran's, strait is open, all supplies open, everything, everyone is just firing out things, as quick as they can, So news is becoming a bit hard to understand because there's so much of it now. So I actually think gold is due quite a big, move here. I don't think it's this particular push here. I do think we're going to get a big wick out beforehand because everyone is going to be having their trades, all right? And this is one thing that you've got to think about as well. Everyone's trades is going to be something like this, all right? They're going to be something like this. So you always have to think, right, if a big move is due, a bit like yen, all right, if a big move is due, well, where was everyone's, stops would have been, everyone's entries would have been at 160. Everyone's stops here would have been just above this one here. So what do? They stop everyone out before the big move happens. All right, you've always got to be aware of that. So gold, I think, is going to be very, very, similar. I actually think we might even wick right the way down here before pushing up. So you've always got to, mark a trader out. Is it worth it? Is it, if we're looking at everything in regards to like one big, move here, is it worth it? Is the actual win to the risk to reward ratio, we could even pump up a bit higher and pump up to these, levels here. But is it worth it? And of course, we've got to make sure. Now, for gold to pump up, yields have got to really struggle. And I would say yields need to push right the way down here. All right, so something needs to happen for this to happen. But I am a bit wary of gold because I do feel like it's a bit of a, kind of a loaded gun here, just waiting for someone to pull the trigger, I don't think there is any more downside potential because obviously we've had, conflict happening. I think there is potential for it to push to the upside here. So obviously that is one thing that I am, just being aware of. So. The other thing that I wanted to speak about, and obviously it's off topic, but it's a very, very good question. So we've got one of us, he might be in here, might not. He's taken, I think, 4K up to 7.5K. All right. So brilliant in 5 weeks. All right. 5 weeks. Yeah. Let's just draw this scruffly. All right. So he's basically made 3.5K. Yeah. So obviously, what he asked me yesterday, and I think it's a good topic to bring up. Shall I start increasing, risk? And obviously, how many of us here turn 500 to 1K and then instantly start increasing risk? I think there was someone else, I think Ricardo, we had a chat about this, a few months ago actually on a 1-to-1, but yeah, we've everyone's instinct is right, what, I've doubled my account, I'm going to increase risk, all right, but one thing you got to ask yourself, okay, 3.5K, all right, in 5 weeks, yeah, 5 weeks. The first thing that I asked, are you happy with this? All right. His answer back, yes, really happy. All right. So if you are happy, why are you going to increase? All right. If you made 3.5K every 5 weeks, would you be happy? Yes. All right. So why would you increase that? Because the bigger that your balance gets, all right, the bigger that your balance gets, the less that you are, risking. Say, for example, you're risking 0.05, all right? And at the moment, that might be, I don't know, say 2%, hypothetically, all right? I'm just making this up. all right? Because you've got, 3K, all right? Remember, if you get your account to 6K, right, 0.05, right, you're going to be a lot more chilled. It's going to be the same profit, yes, but this is only 1% risk, all right? And then you could even get this down to, right, well, if I get this up to 12K, all right, same 0.05, that's going to be 0.5% risk. All right. So you've always got to be looking at that. There's so many things, that can obviously help you, in regards to risk. And obviously, this is where you've got to be happy and comfortable with who who you are as a trader. You got to have strict goals. What do you want to achieve? Don't increase them. Make sure that you are just making it easier. So if you want to make 3.5K every month, make sure if your balance is increasing, it's risking less. So then, your obviously mind's gonna get chilled. Yes, obviously there's gonna come a point where you are gonna increase. You're not gonna run it up to 100K and still risk what you were. But obviously, don't look to increase instantly. All right, because it's a big, kind of learning curve here. All right. So that's that's one thing that I've always, kind of encourage, is, make sure that if you've done well and obviously you're happy, don't obviously look to change things, straight away. Really, really happy with this trade. Look at this, guys. Beautiful. Right. Next thing that I wanted to speak about was I wanted to go over just very, very quickly, and then this will be the last thing, why I use buy and sell stops. All right. So basically, all right, we've all done it, all right, where we'll have hopped on a chart, hopped on a time frame, and depending on obviously what you're looking at here, you can look at any candle. You might be buying off of this one here, you might be buying off of this, you might be selling here, and then if you go on a 5 minute chart, you might be then thinking, right, you know what, this candle's happened, we're in a trend, I'm going to sell here. But then if you go on a 15-minute chart, you're thinking this is holding, I'm going to buy. And so you can see how subjective time frames are. All right. So the reason why I stick to one time frame, one obviously 2 hour is the best intraday time frame. All right. We obviously know that. So it's going to give us the best trend outlook for the obviously time frame that we have. All right. And I obviously implemented lots of things like pre-planning. All right, what do I want price to do? All right, so price when we posted this was just popping up here. All right, so we've obviously marked out our liquidity depending on our aggression style for this morning. Was the zone here. All right, and so we can set buy or sell limits. All right, what does that do? That keeps us strict. All right, because you're only going to enter three, right? And I know, and you know that I know that that if you weren't strict, and probably some of you still do it, and say for example, let's go on a random pair that we don't trade. All right, say for example, you're looking to to sell here, yeah. All right, and obviously your trade was a bit like this, yeah. All right. You you and I both know that you might have your three here, right? But then if you've got no structure, you're going to keep adding and adding and adding and adding. And actually by the time it turns, because markets always turn, it's just we're overexposed. They always turn. We're just overexposed. So the more structure that you can have, the better. All right. And obviously that's why we pre-plan. We've got our three entries, we've got where our, invalidation stop loss is. We've got our overall TP, potentially our TP1. All right. But what does this do? It keeps us very, very, structured. All right. It stops us having these head off moments where we're going to be entering and entering, entering, or we might take a loss and enter something else. We've got to be so strict on our times. All right. And obviously, everything that we do, implements everything. All right. So we don't over trade. All right. We don't enter at random times. All right. We don't enter random pairs. Yeah. Structures here. Yeah. All right. These are all, really, really bad habits that I used to have that everyone has. All right. So these are all the things that, that I've kind of implemented to, help us. But I better go because, so I'm sorry, guys, midlife, we've got a table tennis table coming and it's just here. So have a great day. And yeah, I'll catch up with everyone a bit later on.